I think Ethereum between now and year end, let's say Bitcoin is 2x upside from here. I think Ethereum is more than 2x upside from here. But longer term, in the BitMine presentation, we pulled some work from Mosaics, and let's say it's a 5-year view for Ethereum. It comes to around $60,000 per ETH. So a lot of upside in the next 5 years. Maybe at least a 50% chance Ethereum's network value flips Bitcoin. Ethereum, I think, has more upside because and that's why we call it the biggest macro trade over the next 10, 15 years, because of both Wall Street building on the blockchain and AI as well.
Tom Lee opens with a blunt observation. Ethereum has underperformed for the last 5 years. While Bitcoin regained all-time highs and dominated headlines, ETH's price action has been relatively stagnant. But that doesn't tell the whole story. Lee reminds us that Ethereum underwent a massive transformation, shifting from proof of work to proof of stake and implementing several protocol upgrades that prioritize decentralization and security over short-term token economics.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
ETH lagged last 5 years because it went through a big transition. I mean, it's ETH now is not the same ETH it was in 2017 because they moved to proof of stake, and then they had many changes implemented, and maybe guided by the Ethereum Foundation, that were not necessarily friendly to improving the economics of Ethereum itself. But I think that a lot of that changed this year. So I think Ethereum sort of adjusted its own internal problems, including improving the inflation rate, etc. So there's not too much ETH floating. And then the second thing that, of course, has happened, because there's two other tailwinds for ETH, is that stablecoins have really gained a lot of popularity, and it's caught the notice of Wall Street, but it's also caught the notice of the U.S. administration, which signed the Genius Act, and now the SEC signed Project Crypto, which is really impelling the financial system, like Wall Street basically, to start building on the blockchain. And the third, of course, which is coming, but I think people are recognizing it, that in the world of LLMs and agentic AI, especially with real-world robots, AI is going to become a lot more sophisticated. Because remember, if you're training AI on vision, like actually not just internet and Tinder and Facebook messages, but actually like it's in the real world, you're increasing a vastly amount of information, but then it's also making it harder to verify and secure, who's really issuing instructions. And that's where blockchains and zero-knowledge proof become important. Well, that's a third sort of story arc. All of this should benefit the most reliable smart contract platform, which is Ethereum. And it has zero downtime. Of course, it needs a lot of work to scale. It's scaling, but, to be super scaling. But what I found, especially because I've, been involved with crypto a long time, the crypto community kind of abandoned Ethereum in their minds because they thought faster was better, which was why Solana and Sui, and especially when you had the meme coins, those looked like the place where the economics were the best. But if Wall Street is the reason we're going to see the next wave, Wall Street wants 100% uptime. They don't care about speed because they can build on the layer 2s. And they actually find staking actually a virtue, because that means the power law comes into effect. If Goldman stakes enough ETH, they have a positive voice on Ethereum itself and how they upgrade. Mm-hmm. So I think that, and I was just at Salt, Wyoming last week, and I talked to a lot of the OGs I know, and I'm like, ETH's been kind of dead and price for 5 years, and it has been. And I said, is ETH actually inferior technologically, or do you think it's just the price action stunk and that's why you don't care about it? And almost all of them said it's because the price hasn't done well, especially compared to Bitcoin, that they don't care about it. So I think that's why this year and what's happening recently is actually an important moment for ETH, because it is galvanizing the community again. And of course, if we can stay above the new highs, which is above 4,800, as you know, that means we could have a really big cycle for ETH. Ethereum, I think, has more upside because and that's why we call it the biggest macro trade over the next 10, 15 years, because of both Wall Street building on the blockchain and AI as well. So you have like sort of two cohorts actually probably deciding that it's really additive, right? Remember, the financial system is half of the economy. And in the stock market, financials are trading at a lower valuation than tech. So I think financials can re-rate in that world. But Ethereum is sort of the network value beneficiary. So I think Ethereum, between now and year end, let's say Bitcoin is 2x upside from here. I think Ethereum is more than 2x upside from here. But longer term, in the BitMine presentation, we pulled some work from Mosaics, and let's say it's 5-year view for Ethereum. It comes to around $60,000 per ETH. So a lot of upside in the next 5 years. Maybe at least a 50% chance Ethereum's network value flips Bitcoin.
A particularly innovative part of Lee's thesis is around Ethereum-based crypto treasuries. ETH is one of the few crypto assets that naturally pays a yield through staking. And unlike ETFs or traditional funds, crypto treasuries don't face liquidity or redemption constraints. That means they can stake 100% of their holdings, maximizing passive income, and during bear markets, they can buy back stock, consolidate with other treasuries, or acquire distressed assets just like traditional corporate raiders.
So there's some virtues of a crypto treasury, but I'll speak to Ethereum specifically, that make Ethereum treasuries pretty unique. And I think that's why there's so many in the Ethereum ecosystem. Because number one, Ethereum pays a native yield, a staking yield. And you might say, well, if you own an ETF, you can get the same yield. That's not true. The ETFs have liquidity requirements. So if once they're allowed to stake, and they haven't gotten the green light to stake, they can't stake probably more than 50%.
Because of redemptions.
Yeah, because of redemption rates. So they wouldn't be compliant if they staked more than that. So an ETH treasury can stake 100% of the yield. But number two, because Ethereum is a proof of stake chain, power law comes into play. If an Ethereum treasury is large enough, they are a benevolent factor on Ethereum itself. Right. So let's say that BitMine wants to get to 5%. That's where power law kicks in, because that's when that entity can then work in a way that's benevolent to the system, whether it's seeding DeFi or providing liquidity to the system, or if Wall Street's trying to come onto Ethereum, you can become a staking partner, or do many of the other rails that will come with Ethereum. So in the crypto treasuries operate almost more like digital infrastructure because of the way they interact with the ecosystem. The third is, I don't think that it hasn't happened in Bitcoin yet, but the Ethereum world, if in the crypto winter you're describing and something trades below NAV, it's going to create incentives to do horizontal acquisitions, acquire other crypto treasuries. Or some of the crypto treasuries might work in the reverse direction and sell their ETH and buy back stock. And the fourth thing, which I would point out, is you're exactly highlighting a key issue, which is that a first principle of any crypto treasury should be having the cleanest possible balance sheet, because you don't want to have your volatility eradicated or debt to strangulate you. And that's why, like, you know, BitMine has only been doing straight common equity to raise capital. So no converts, which is essentially synthetic debt, and it robs your volatility.
Right.
The stablecoin, which is backed by actual dollars, but it, as we all know, it becomes circular because it's a dollar. But the stablecoin issuer is then taking the pledged assets to buy treasuries. They're becoming a buyer of treasuries. So in other words, like, stablecoins are providing essentially a permanent financial stability, because, you know, the largest holder of U.S. treasuries today is just Japan with I think Japan's like 1.1 trillion of treasury holdings. I may not even be that large. So it's not that many orders of growth before stablecoins are larger than Japan as holding U.S. treasury.
It's about 1.1. China's about 1.1.
Yeah.
Japan about 1.2. Yeah, they're both.
Yeah, both similar. And the second...
Yeah, 1.15 for Japan.
Yeah, okay.
Jubilee.
Yeah, and then the second thing to keep in mind is that if central banks create digital currencies, and there's different forms, but let's say the Fed does do a true CBDC where every American has an account with the Fed. So if they want to do monetary easing, they may not do interest rates anymore. They might just drop dollars into your bank account. And then if they need to tighten monetary policy, they can pay interest on that. And then if they want to tighten policy, they can take away the money. So in that world, there's probably no longer a yield curve as well. I mean, in a way, like, long-term debt is almost like a theoretical construct, because I'm not sure there's necessarily a long-term yield curve.
So, what does this all mean for Ethereum's price? Tom Lee is extremely bullish. While Bitcoin might 2x from current levels, he believes Ethereum has even greater upside. His 5-year target, around $60,000 per ETH, based on models built with Mosaic Research. That's a more than 20x increase from current prices, and in terms of network value. He assigns a 50% chance that Ethereum could flip Bitcoin within the next decade.